This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live this Tuesday morning from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, good morning. Looks like the bulls have got their mojo back, and that momentum is sort of picking up in the market now.
Well, yesterday it did feel like we were at around 18,000 odd. You had the mid-cap index that did pretty well. You had plenty of stocks that did well. Remember that song from Nirvana, Smells Like Teen Spirit?
Smells like new highs, huh?
It smells like new highs, yeah. We're getting in that direction.
We're very close to new highs anyway, right? I mean, the bank Nifty is just 2% away from a new high.
I mean, so it's a matter, it's just a sort of technicality in that sense. For all practical purposes, the indices are already there, but you have to get there to say that we are at new highs. But will we see a quieter Tuesday as compared to a fiery Monday? I think that's the question, because yesterday was just gangbusters, right? The market basically erased the memory of last Friday's losses and how it started higher and then continued to move up in a gentle incline all through the course of the day, which means that you could have gotten in at any point and you would have been higher and in the money thereafter. So it was not a gap up and then nothing happened for the rest of the day. So that's the market. That's the kind of market you want. Overnight cues are kind of flattish. I mean, this market is just consolidated. The Nasdaq was up about 0.18. The S&P was absolutely flat. Yields on the 2-year are back up at about 4%, but they've been knocking at 4% for the last 2 or 3 days. They've not been able to cross it. Oil prices are inching higher. I mean, the entire mix after the US jobs data has changed, because before the jobs data last Friday, there were concerns about recession. Now, markets are getting a little more confident that it's not going to be bad. Maybe in the US we'll see a soft landing, but it won't be a hard kind of crash, a very sharp slowdown. At least that's the data from sort of last Friday. Now, the next big data point out of the US is the core CPI number, the inflation number. So the labor market is strong. April was super strong. What about CPI? And I think that we'll only know Wednesday, as around the time that the US markets open. There is still 2 days to go for us before we get that data. Here in India, things looked quite good, at least on the Nifty. Actually, on all the benchmark indices, it looked pretty good. The Nifty broke above the recent high of 18,267. That was the high which we made last Thursday before Friday's big sell-off. So we closed kind of around it. Intraday, we took it out very comfortably. The next resistance for the Nifty is 18,450. 18,450, by the way, is nothing but the 78.6% retracement of the entire fall. In a way, that's the last stop before you kind of head out to newer highs, and you kind of have to project sort of 18,887 kind of levels once that is taken out. So that's the next logical kind of resistance to take note of. Now, in all of it, if the uptrend has to continue, the low from Friday should not be violated. That is still some distance away, because we've very quickly put some distance between where that low is and where we are. So that was 18,055, and that should hold if this uptrend has to continue. So that's the Nifty for you. On the Bank Nifty, we are yet to take out the last Thursday's high, which is 43,740. It's not very far away. It's about 1%, less than 1% or so from where we are right now. The low on the Bank Nifty, which should not be violated on the downside, is 42,582, and that should hold if this uptrend has to continue. So, I mean, the momentum is with the bulls. The inclination is try to buy the dip and look for higher levels, and I think that kind of impulse will continue. If you're trading, I mean, as I always say, watch the price action. Don't do anything right out of the gates. Watch the price action for the first 30 minutes, 40 minutes, and then let the market tell you what you want to do. But it's absolutely clear. But the SGX is not showing a very sharp decline or anything. I think the last I saw, it was just a 20, 30 point change. So it's not giving you a big kind of move that, provides that opportunity. So see the price action, the first 30, 45 minutes of trade, and then decide what you want to do. But the impulse is to look for higher levels from here on. Sonia.
Oh, absolutely. And it's a great time to be bullish on the market, right? Because you have many things that are working. I think recession fears are receding globally.
Yeah.
So demand is picking up globally as well, and that bodes very well for markets like our own. So as you said, momentum has picked up. I mean, the Nifty is now at a 5-month high, and definitely the bulls are back. Even that resistance zone that we were talking about in the last many days, 18,200, that has been conquered effortlessly. And in the last 1 month, the Nifty has put in almost 640, 650 points. A large part of it has also come from the FI fraternity, so big buying coming in. Yesterday, there was, 2,100 crores of buying in the cash market. That's a huge chunk. And put together, FIs have bought about 7,650 crores. There's also a lot of momentum back in leadership sectors like banks. The Bank Nifty, by the way, is now just 2% away from its 52-week highs. So all set to make new highs over there. In terms of local cues, many things to track this morning. You have the Mankind Pharma IPO that will be hitting the exchanges today. And this is a big one. It's the largest IPO this year. It'll be raising over 4,300 crores and great pedigree, no debt of the company, very strong growth, 16% compounded revenue growth in the last couple of years, strong institutional subscription. So this is going to be a big one to track. And Macquarie says the company is well positioned to double its profits by FY26. So that's how much, conviction the market has. Also, you have companies like Apollo Tyres, Lupin, Castrol, Everready, Nazara Tech. So a lot of non-index large caps that will be reporting their earnings today. So we'll keep track on that one as well. But otherwise, you'd have to say that the bulls have tightened their grip on the market. And, now there could be a little bit of a FOMO factor. People have perhaps that have not participated, retail investors. Generally, when they see the tide turning, that's when they jump in. And, you could definitely see that give an additional push to the market.
Well, yesterday was a very, very good session, Sonia, because the last stick was virtually at the high point of the day. And, when we were moving into the final hour, you had a bit of an intraday dip, which got bought into. So the data points are good. Now, from a bullish perspective, you want to follow through day. So you want to see a good Tuesday as well. Just to put on the broad trade setup out there, the FI data is very, very bullish, whether it's in the cash or the F&O market. Buy on dips on the Nifty is likely to continue till the global cues are more or less stable, which is the case as of now. And the Nifty Financial Services, that plays out the weekly expiry. So that's the most crucial factor today, and that holds the key really for me. In terms of flows, well, the net institutional data was positive. We were talking about on Friday, I had a bit of an off day. That's the FI and the DI data together. So that's good news. The flows continue to remain stable. I said the FI data was positive, right? Just take a look at the long edition. You want this market to be a little net short, which is the case. They're 51% of their positioning on the short side. But they've added 11,000 long contracts as well. Now, moving into yesterday's session, there was a lot of call writing, which quickly got unbound. And there's aggressive put writing that we've seen. 1.5 lakh put contracts have been added. Now, that's a good sign telling you that the base of the market has moved a little bit higher as well to around that 18,050, 18,100 odd just in the near term. Strikes that were active, 18,200, 18,250. Between them, they added close to around 90 lakh shares. So aggressive writing is what we're seeing at those levels, which brings you to a support zone. Going by that put writing that we're seeing for the day, the support zone will be around 18,150 to around 18,200. But since it's the Nifty Financial Services expiry, the most crucial factor will be what happens on that index. Now, the 19,200 put yesterday was very, very active. The premium ended at around 22 rupees. But closer to the high or the start of trade, it was around 180, 190 rupees. So those put writers, they're looking at the 19,000 odd level holding out. Pull up the Nifty Financial Services Index. Yesterday, it ended close to around 19,300. Now, support comes in at around 19,000, but it's on its way to hit a fresh 52-week high, which will be very, very important. If the Nifty Financial Services Index can get to that 52-week high, then we're off to the races. We're seeing 18,500 and thereabouts as well. SGX if we're suggesting a bit of a downtick, which is not such a bad thing. In fact, you'll want to have a little bit of a deeper gash from a bullish perspective so that they can get into the index. Watch the Nifty Financial Services. For me, that holds the key.
All right. Well, before we go any further, let's just quickly tell you what is lined up in the first half hour of the show today. We get you updates from markets across the globe. Lawrence Belanco will decipher the global price action. He's, of course, the technical analyst with CLSA. We will discuss the stocks to watch out for, results, non-results, news flow, all of that with our research team on Top 10. And at 8:30, we do a fundamental stock analysis with Gurmeet Chadha of Complete Circle Consultants. So you don't want to miss those conversations.
Okay, so plenty to talk about. On the equities front, we have, in fact, a view coming in from Mahesh Nandurkar of Jefferies, and he's quite positive on the market. He says, notwithstanding the global concerns, India is on a path of capex cycle recovery. Investors have warmed up to a capex upcycle, but there is a perceived dearth of playable stock ideas. As the investment cycle gathers pace, Mahesh believes that the investors will be forced to buy the stocks even if they are considered expensive. Jefferies is comparing this situation to the re-rating of consumer stocks over the last decade, and their preferred capex cycle plays are L&T, Thermax, Polycab and KEI Industries. So another optimistic view coming in over there.
All right, so money market views on the rupee. Abhishek Goenka of IFA Global says the Fed's latest policy indicates a data-dependent approach with no pre-commitment to aggressive tightening. The market expects a status quo in June and 3 rate cuts in 2023, but there is a disconnect between Fed's communication and market expectations. Back home, the RBI has been mopping up dollars to place a floor under the USD-INR pair, but the rupee is likely to eventually break in the direction of fundamentals, resulting in a downside for the pair given current favorable BOP dynamics with crude at $75 a barrel. He expects the rupee to trade in the 80.5 to 82.5 range for the coming weeks.
And on the bonds, Ajay Magnolia of JM Financial says stronger than expected US labor data led to yields retracing after the Fed's rate announcements. Domestic yields tracked the US Treasury and started the week higher. With decent FI flows and clarity on the Fed's policy path, domestic yields are unlikely to see any sharp movement on either side and expected to move in line with global markets. State development loans and corporate bond supplies is on the lower side for this week, and the only trigger could be the US and domestic CPI or inflation data slated for later this week. He expects the 10-year benchmark to trade in a range of 7.03 to 7.08%.
Well, we have a lot of stock-specific action. We're going to get to that in just a bit in our special Top 10 segment. We're looking at MGL, Birlasoft, Carbon Universal, Kansai Nerulac Paints, VIP Industries, Andhra Paper, and Easy Trip Planners. They are stocks on the back of positive news flow, while we have 3 of them that could be reacting to negative news flow, which is Pidilite, Aarti Industries, and Kalpataru Park.
Okay.